Check. All right, good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 10 minutes till 9 a.m. Eastern Time on Wednesday, September 24th, uh, which happens to be my youngest birthday. My youngest is turning 34 today. Happy birthday, Grant. So, as we look at yesterday's action, right, we had these green, and forgive me, it's just the way it tosses. These colored boxes don't show up the same for you guys as they do for me. But if you've been around long enough, you watch mine, you'll get used to what color is what. So I use green for poor structure on the upside, and like pinkish for poor structures at a downside. But toss doesn't. I'd have to hard code it in here to get the same colors for that. I don't do that on these single print boxes that I put on the equities. I do it on the positioning charts. So you see exactly what I'm seeing on the positioning charts for the ETFs and the cash. But back to the point I'm trying to make. We have poor structure to the upside on Monday's auction, right? It was replaced with poor structure to the downside on Tuesday's auction. But basically, all we did was go right back up to where we started the week from on Monday, right? This is it was just a round trip from basically 6650 to 6700 and back down to 6650 in the cash market on the S&P 500. There's nothing really at this point in time more to be thought of than that. And maybe we'll just consolidate in this 50-point range as a scenario. We'll just have to see if I always say that no one rings a bell at the top. Sometimes you get a bell at the bottom, but not everyone rings a bell at the top. But usually at the bottom, there's so much fear, right, that people just ignore it anyways. Uh, but so we'll see if there is a bell ring at the top, right? Yesterday's reversal with structure is as good as anything, but I'm not gonna get too excited about it yet to the downside. I want to see what the VIX can do. The VIX is at between 18 and 1850 basically for the most time. You could say 1860, uh, and then go from there. So on the cash market, right, for the Qs, 600 is still your call wall. Although there are some positions above that, it's just that's still what you should think of a resistance. And we'll get into the rest of the positioning here in a minute. But the main takeaway is we're just sitting here between 6650 and 6700 in the cash market on the S&P 500. Looking at, and the title of my video is No News Wednesday, really, because we have, existing new home sales, I'm sorry, at 10 o'clock, crude oil at 10:30, and then nothing, right? We have Daly's going to yabber on after the closing bell. We're going to have a little bit of news tomorrow, but it's final GDP, not preliminary. That usually isn't as much of a mover, but we are going to get some core durable goods, which should be an interesting read, along with final GDP price index. Again, that's not going to be much of a mover. Looking at the rest of the week, and the big read for the week, really, the biggest thing was on deck news wise that could be a catalyst to do something for the market. Uh, is sitting here on Friday, right? This core PCE. This is the Fed's Jay Powell's favorite peg of the month to watch, right? He actually views this a little bit more than unemployment at this point in time. So this is his favorite peg. We'll see, how that goes coming up. And then as now that we've had a little bit of price down, and you guys can get this link. This is nothing special. It's just Fed Watch CME. Uh, Google and I look at the probabilities chart. It shows all the meetings and whatnot. So right now we're between uh, and 4.25 on the basis points, the overnight lending rate. A lot of people will just quote the high side, so they would say at 425. So let's just whatever. But it's really 412 and a half. It's in between there. But as we look at what we've got here, uh, this is where we're at between 400 and 425. The next meeting on October 29th, basically 94% chance, which it's going to happen at this point in time. This is what price said, a cut. And then on the December 10th meeting, a cut. And then we're going to skip a couple meetings. And this is where I diverge a little bit from the way I like to see something fully priced in, as to opposed to the CME group, what they like to see fully priced in. So the CME is saying that you're going to get another cut on March 18th. I'm saying you're not going to get another cut that's fully priced in until June 17th, and that will be the last one that is fully priced in. So they're saying there's going to be a total of four. I'm saying three, tomato. That's going to change between now and then. But either way, the next two meetings, you're going to get the cuts, and then we'll have to see what prices. And, that's going to be a whole quarter away. So just a little Fed update there. So we had, basically, if we look at the session time frame, one time framing up is still intact, right? So we had a little bit of a down candle yesterday. Yesterday's point of control, and that's what you can really kind of watch today on the ES, 67.16. And we can see, are you staying above there after the initial bounce, or below it, right? And by more than a few ticks, right? So, and then you would also end one time framing uh, up for sure on the session below 6,700. It's 6701.75 was the low for yesterday. So, and then the next untested point of control goes back to last Wednesday, the FOMC day on September 17th at 66.61 quarter is what we're looking at. Ironically, the following day, uh, you just got down to 66.64, right? So you missed it by about 275. Um, so looking at where we're at, and again, a lot of technicians, you can vary on it, but I don't like to split hairs. But I will point out what some other people are looking at. Uh, if we remove the extended session, right, we have ended one time framing for both the NASDAQ, the NQ, and the ES on this on the continuous contract or on the December contract, however you want to look at it. They're both the same at this point in time because December is the front month. But I always say, is it going to be when you had a big move up like we've had, is it going to be a one and done? Or, usually uh, moves are an odd number of days, right? So it takes, it's either 1, 3, 5, 7. You get the idea. You know what odd numbers are. So is it going to be one and done or not? And that just means that you would have to take out yesterday's high. I don't know if we'll take out yesterday's high, so I'm looking at maybe a 3-day here. So maybe Friday we'll get back into it. But if you look at the session, we have not ended one time framing up. So there's a little bit of, you know, splitting hairs again there. So I'm going to basically I usually put a lot more weight into what happens between the bells, but it was so close. I'm going to say one time framing up is still intact, uh, is the way I'm going to view this until we can take out a previous session low and close and hold below it. So, right, you have your choices in profile theory, right? You can have a look below and fail, meaning you hit down there and you come back up either that same session or the next session, or a look below and go, right? And you can just streak down, which would mean that you're probably going to hit that 66, 61 POC from FOMC, and then we'll have to see from there. But right now, what I'm looking at is potentially we've got a little bit of range, and I like the idea of maybe being range bound until proven otherwise between on that cash market. We'll get back into it between that 6650 and 6700. Looking at that poor structure down, right? We're not even we're holding the The overnight high is going to be, for people that aren't watching structure, that overnight high is right at basically the top of the poor structure down, right? Meaning that for things to be a little bit more bearish, maybe having a potential of taking out yesterday's low and streaking below it, you would have to maintain basically price action, except for maybe a flash, a liquidity sweep over and back in. You have to stay below this overnight high now in the NQ. Uh, and then as you look at the ES, you could really get up to around 67.31, right? And you can see yesterday, even right at value area high as I draw it, 67.42 uh, is value or the low side of value area high. And then you can see the 1 day expected move and toss now is below yesterday's low, right? So it's saying that uh, what the 1 day range has, and it doesn't mean you're going to hit the top or the bottom. It just means that, this is what options were priced in. Looking at today, at the close of tomorrow, things can change, as soon as that bell rings today. But they're looking for basically, uh, right in yesterday's range to slightly one-time framing down now. That is what's priced in the market. But taking out yesterday's high is not priced in. So taking out yesterday's high uh, and holding above there without dropping VIX would mean you've caught everyone off guard again. You've pulled the rope from, you've done shenanigans on the bears again, and we'll have to see. Uh, but otherwise, if you can hold this poor structure down, you maybe we've been hitting these expected, high end of the range every day for as we've been streaking up almost, and then not even sniffing the lows. So, you know, see if we can get a sniff of the low. But keep in mind that we will end some of this uh, structure. So we'll see if you can get a little bit more of a shakeout, I guess is what I'm saying. But what I'm really watching is just above this expected low of the day at 24,667. You've got 24,694, right? That was the end of a distribution kind of some excess lines. So I'll be watching to see if we do start rolling down there, that'll be one of the areas that I'll be taking everything. If I'm short, happen to be short coming into this, if we do go that way, I would be taking everything off but a runner slightly above that level, and then kind of sitting on hands and just trailing that runner's uh, stop, right? I'd be trailing it down, giving it a little bit of play, but uh, a little bit more than I would a full position to see if you can go. But then holding back in yesterday's range would definitely be you have to let it go. But you could technically get back up to uh, right around this uh, unchanged mark to the bottom of this box or even the top of it at 24,864 and then roll back over once again. But I think you would have, if that were to happen, if you stopped yourself out right around this area of, let's just call it 24,800 if you go down there, that you'll have, if we do go up higher than start rolling back over again, you'll have some structural issues, as Jack would call it, some, uh, forming fair value gaps to use the trade against to look to short and then, retest that low, especially if you're in a sequence and that ends up being the short entries right around in there. But we'll have to see. I don't want to get too far ahead of myself. There's no one knows what's going to happen, but that's just a potential scenario to play out. Uh, and then let's get into positioning here. So 600 is still the call wall long term, but for the day it's at 602 with that basically high end of the expected move at 60230 right around there. Um, Looking at really where you're at now, the call wall for the week is even below here at 595, but you've got the expected low end of the day just above 594. So status quo would mean that we're just going to be between today's range, just a little bit above 594 up to a little bit above 602. Anywhere in there is fair game. If you look at my positioning, you can look, I've got the overnight shaded. You can, toggle that off easily by looking at the quick picks. You can unhighlight that if you want. But if you look at yesterday's session, you can easily see where I've got it grayed out. Uh, those are blocks of just a concentration of options positions. So meaning you can just rotate in that area until you break it. Think of it as a potential trading zone. So between 598 and 601 is a potential trading zone, and then you don't really have another one until 605 to 607 above. Some other areas that could hit in between there. And to the downside, under that expected low of the day, you've got another concentration basically between 591 and 592, right around in there. Uh, I'm sorry, let's do that again on the low side. 592 to 593 is your concentration area. And that's just a little bit below that, that 594 expected, move. And then you got some large gamma at 590. I would not expect us to be able to get below 590 and do anything today as an extreme to the downside. That would be 400 points down from where we're currently trading, just to give you an idea. And on the upside, where that expected high is from right now, you're looking at uh, basically 110 points higher on the NQ from where we're at right now. We're already up 50, so let's say that would be, right up around 160 is where that would be. So looking at the cash market again, uh, obviously you don't have to be much of a math genius to see that the halfway mark between 6650 and 6700 is 6675. You could split hairs and you could, get these highs and lows, but that's going to be around your bogey mark for the halfway back short. That, you know, getting traction above 6680 um, is shouldn't really happen if we're going to be too bearish, but keep in mind the expected high move of the day is up here, and there's a zone between uh, 66.85 to 66.90. And for those of you new, right, this is the SPX up here. It's got its own quotes. It doesn't trade at the exact same price as the ES or the, as a multiplier of the SPY. So watch them all, and then that's why they're here. But I've got the cash market and the SPY and the QQQs clearly marked out with where positioning is for today. I hope this helps. We'll see if what we can do with this poor structure, right? Can the bears hold it down for a little bit or not? Remember, there's really nothing going on. There's a little bit of news at 10, but we usually have volatility at 10 o'clock even when there isn't news. So I don't expect a whole lot today, meaning the market. You always have to assume the market is just going to be in what is expected in that expected range until proven otherwise. That means the VIX is really going to be getting out of yesterday's range and this week's range. So as long as it's still in this week's range and especially yesterday's range, don't look for, huge targets one way or the other. Just play the norm. I hope this helps. You guys have a great day. We'll see what Jack's looking at next, and I'll